Hello, guys. Today we're going to talk about financial statements. Really important. Okay, so we're going to make it a short video, but it's a very important thing to know getting into your exams next week. Okay, you got financial statements. So, financial statements essentially just two statements you need to know: income statement and the balance sheet. We're going to talk about the income statement and then we're going to quickly talk about the balance sheet. So let's start with what makes up the income statement. But what is an income statement? The first thing, income statement shows the business revenue and costs. And therefore, if it shows the business revenue and costs, then you can also show the profits and loss. Okay, so that's what an income statement means. Okay, how much income the company earns, what are the losses, and obviously the profits. Okay, so that's a really important thing to know. So the most important thing we need to start knowing is revenue. What is revenue, guys? Think about what is revenue. Say it now. What is revenue? Quantity times price. Hopefully you remember that. Quantity times price. Remember, revenue is not profit. It's just the quantity times price. Okay. Another thing we need to know as well, in terms of the components of an income statement, is cost of sales. Okay, very important. But what are cost of sales? Cost of sales are costs involved in directly supplying the good or service. Let me repeat that. Cost of sales are those costs involved in directly supplying the goods or services. So I've got a question for you. Now the question is, Alice has a baker shop. Will the driver's wages who delivers the flour and eggs to Alice be included in the cost of sales? Okay, the driver that brings the eggs and flowers to Alice, will the driver's wages be included in the cost of sales? What do you think, guys? What do you think? Hopefully you got the answer is yes, it would be included. Anything that's directly involved in the goods or services. Remember, cost of sales are costs involved in directly supplying the goods or services. So anything involved in the goods and services, directly involved in the goods and services, will count as cost of sales. Okay, it's really important to know that one. For example, another question: what about energy costs such as gas and electric? Will that be added to cost of sales? The answer is, what's the answer? It is yes. It will be part of the cost of sales. That can be a little bit tricky because people think, oh no, it can't be. It must be part of something else. No, it's part of the cost of sales. So just bear that in mind, okay? So, when we know the revenue and cost of sales, then we can calculate what the gross profit is. Remember, the gross profit, guys, is revenue minus the cost of sales. The gross profit is revenue minus the cost of sales. So that's the first part of this income statement that we need to know. Let me just put myself over here, get myself out of the way. Okay, then the next section we need to know is what are overheads. Overheads are costs that do not alter when the level of production changes. Okay, they're costs that do not alter when the level of production changes. So it doesn't matter whether the production increases or decreases, those costs will still be there. Okay, hopefully you know some examples of overheads, such as things like rent. Doesn't matter how much you produce or how much you sell, those costs, the cost of the rent will still be there. It's not going to change. Doesn't matter whether you sell a lot or sell a little, it's a fixed cost. Okay, so those overheads are costs that do not alter with the level when the level of production changes. In other words, they are fixed costs. Okay, after you know that, then the next thing you need to know, the income statement, is what you call operating profits. Operating profits. These are overheads minus the gross profit. Overheads minus gross profit is going to give you the operating profit. So just try. We talked about what cost of gross profit is. Revenue minus cost of sales. The operating profit, okay, will be your overheads, getting all your overheads, all your fixed costs, take away your gross profit, will give you your operating profit, okay? Now, when we know your operating profit, the next thing we need to know is to work out your net profit. Remember, net profit is literally when all your taxes or interest payments are taken away. In other words, it's what you call the bottom line. The bottom line, what you eventually make. Okay, what you eventually make. So just remember, operating profits is not essentially what the company will take home. Okay, because you still got to take out taxes. You still got to take out interest payments. Okay, so the net profit is after everything's been taken away, and that's the final amount. Okay, that the company's going to. So hopefully, guys, you've understood what an income statement is. Now we're going to quickly go on to what the balance sheet is. Remember, we're talking about financial statements. We're talking about income statements, and we're talking about the balance sheet. So let's carry on with this very quickly. Let me get myself over here. Balance sheet. Okay, so the balance sheet, again, not hard to understand. Balance sheet just shows the assets and liabilities. There's some keywords that you need to know in the balance sheet, okay? Balance sheet, you got income statement, you got balance sheet. That makes up your financial statement, okay? These are two very important things that a bank or any investor would want to know. And you'd want to know exactly how well your business is doing. It shows the relationship between your assets and liabilities. So some of the key terms we need to know. For example, non-current assets. What are non-current assets? These are assets that a business will normally keep for a few years. For example, shops and vehicles. Okay, these are assets that they will keep for a number of years. That's what you call a non-current asset. Non-current asset. The assets that you're not necessarily going to need. You're not going to need for the next few years. Okay, they're long-term assets. Okay, the next thing we talk about are current assets. A great example of current assets are things like cash. Okay, that's immediate. Okay, current, that's an asset that you have. Even things like investments, stocks and shares could literally could be what you can consider as a current asset. You don't necessarily have to keep it for a number of years. Okay, after we know about the assets, so you need to know about assets, non-current assets, and current assets. Okay, then the next thing we need to know is what you call the liabilities. Okay, current liabilities. Businesses will have to pay within a year. Will have to pay within a year. Okay, for example, money owed to suppliers or tax. So current is current. Within a year, you're going to have to make those payments. Where non-current liability means debts paid back over a number of years, such as like a bank loan. Okay, so again, when you talk about assets, current assets, non-current assets, it's the same similar process with non-current liabilities and current liabilities. Remember, non-current is going to be more in the long term, where current is pretty much within the year, immediately and within the year. So hopefully, guys, you've understood what a financial statement is. Very, very important to understand. It's income statement and the balance sheet. Very important to understand that. That's very a question that will definitely come out in terms of things like gross profit, cost of sales, and other things. I'll do one or two more videos, but hopefully you've understood this and that reminds you about what you have to know for your exam. Okay, so if this video has been of any benefit, please smash the like button, and I'll see you guys soon, and best of luck. Thank you. Bye bye.